Let's get to Philip Chan, our director at Shenyin Wanguo Securities, who's joining us live right here on the call. Great to have you with us, Philip. Happy Monday to you. Thanks for joining us.
Good morning.
Let me ask you what you're thinking about the markets at the moment. I mean, clearly macro issues are still very much dominating sentiment, that of the fiscal cliff in particular in the US, but of course also what's going on in the Eurozone and whether or not we'll get the next tranche of aid up for Greece in terms of the meeting tonight. That's influencing the markets here in Asia, but once again, we are seeing an underperformance coming through from the A-share index, as we've just been talking about with the reporters there. Is there something that's going to continue?
Probably for the foreseeable future, yeah. There's a lot of interest in the Asian markets per se, but there's a wide variety of stocks there, and even though the valuations are low, foreigners can't really play that market in a big way because of the obviously because of the restrictions on the QFII quota. So yes, there's a lot of interest there, but we don't see that there's going to be much upside or even downside in the near term, and it's either going to be trading sideways or just drifting, and that's it really. We don't see much impetus.
Philip, could that not change at some point in the future? I mean, clearly we do have this leadership change that's going to take place in March next year. We've been talking about the fact that the new leadership in China may well open up the financial sector over the next 5 years, but is easing up on those investment restrictions and allowing more foreign investment into the country and into the share market, likely to be a catalyst for, I guess, more money coming in.
Well, these are catalysts, yeah, and they, as and when they're sort of released or leaked or sort of announced, I mean, these will have positive surprises on the market. But as to sort of, it takes time for even if they announce things like more money to be able to go into the market from foreigners. It takes time for that to actually to be realized. Usually a few months. So we don't see major moves from the authorities, even in this new leadership change, for maybe the first year. So maybe some positive surprises.
If that is the case, then over the next 12 months you do want to invest or get exposure to the China market, what's the best way of doing it? Is it looking at the Hong Kong market and investing that way, or is it looking at, for example, potentially an Australian or a US company that does business in China?
Well, I think the global fund managers are doing it that way. I mean, what I mean is that they're investing through through companies that have got exposure to China, global companies usually. So they from a risk point of view, they prefer to do it that way. Directly in A-shares is a specialist sort of investment, so we would sort of recommend doing that, but obviously in a small allocation to the portfolio. Best way is obviously to in the near term is through the H-shares in Hong Kong, or the red chips, or the private enterprises, which there are a lot in Hong Kong.
Okay, if that's the case, Philip, let's talk the sectors that you're recommending at the moment. You're neutral on property, but you have got some buys.
Yeah, there's I mean there are a couple of interesting ones in the property space. I wasn't going to actually be naming sort of stocks today, but for instance Sunac and Poly Hong Kong, we actually quite like. On the pharmaceuticals, we like pharmaceuticals, healthcare. We also like generally staples, consumption staples, and also some of the banks.
Philip, we're always interested in names, as you well know, so we appreciate you naming a couple of stocks there. Can I ask whether you're invested in those yourself?
No, I'm not. And neither is our company.
All right.
So.
Okay.
Yeah.
All right. Philip, it's really been